Hello everyone, in this video I want to show you one of my secret smart money concept for finding trade entries. I'm going to show you how to spot them live on your chart, and then how you can properly use them and take trades almost every day. They are called mitigation blocks. I'm going to show you that on a chart, but let's start by sketching it live here before we go to the chart, and then we are going to spot them and I will show you the techniques I use for taking trade with them. So a mitigation block can actually be found on a market that has this pattern. Let me show you. If you have a market like this forming a proper market structure with a retracement, we have a movement from here to here, and if we have a failure swing at some point, this is the formation, and price decides to crash down and violate this last order block. Remember, if you're finding your order block, it is normally the last bearish candle that price traded through from this level, and in an ideal smart money concept, we expect this order block to reject price as price was coming down around this area. We want to see price push up again, because this order block is a very powerful institutional reference point that price should react around and start going up. But if we have a failure from this order block to reject price, we are eventually going to violate that order block, and then we will have market crashing down to this side. So this order block is now our mitigation block. It is no longer an order block. We want to see price come back to that particular block this time around, to this area, and react around this level and push price downward. So this order block is now our mitigation block. Let me mark it out so you can see. It is what we call a mitigation block. This order block, it is no longer an order block but a mitigation block, which we want to see price react around. So this is what we call a mitigation block. So just like order block, we have a bearish mitigation block and a bullish mitigation block. In this regard, this is a bearish mitigation block because it is the last bearish candle that price traded through. So from here, we expect to see price push down to this level. You're going to see them practically on your chart. Let me just finish sketching it for you, and then we're going to go to the chart, and then you will see a lot of them. So this is your mitigation block. Then you can have a pattern like this the same way. This time around is a bullish mitigation block, okay, a failure swing. Then we have market pushing up, and then coming back to this level and test this order block that was violated. Okay, remember I said this used to be an order block, but this time around it has been violated, so it is no longer an order block. It is a mitigation block, and in this regard it is a bullish mitigation block because it pushes price up from this level. Okay, so this is exactly what we are looking for. We just map this level and then adjust it. Let me just show you how to properly see that. So this is our bullish mitigation block, and then this is our bearish mitigation block. Remember, the mitigation block should have a failure swing. We don't want to see it take out this level. Okay, this is where we have a failure swing, and then at this area too we have a failure swing. If we have this failure swing and then it crashes down to this side and come back to retest this particular order block that was violated, it is now a mitigation block. So let's go to the chart and find them, and you can see how to use this very powerful technique for trade entry. I'm seeing a lot of them right here. So let's start with this particular one. Let me delete everything right here. So look at what I'm seeing right here. If I adjust this to this level, let me show you what I'm saying. Can you see this area? Price came all the way from this place to this level, and then retraces back, and then came back again, failure swing, and it crashes down to this side. And then look at it. We formed the exact pattern we were looking for. An M formation. You can see this is a formation of mitigation block, failure swing, price coming to crash down to this side, then it is coming back. Look at it. The last bearish candle that was printed is now our mitigation block. We will map it out like this and expect price to come back to that level. So this is how we trade this. Once we see this happen, if price come back to this mitigation block around this area, we can see this is our sell area. Okay, this is our sell area because this is a bearish mitigation block, just like I told you. And then you make sure that your stop loss is just right above the failure swing. Okay, the failure swing, or if you have a small mitigation block, you can put your stop loss just right above it, and then you can take price. Your take profit will be determined according to how you want to see it. You can start by 1:1, and then you can later expand it to 1:2, as long as you have an entry being given to you by price. So this is actually how to spot a bearish mitigation block. You can see a lot of them on the chart, but I'm just showing you how this forms. This is a mitigation block. This bearish candle that was last printed, let me expand it a bit so you can see, is your mitigation block. So let's find a lot of them that we can see on the chart. I'm seeing another one right here. You can just take your guess and tell me which of them is the mitigation block. Look at it. Okay, we have price move to this side, come back, and then failure swing, it crashes down, and then it came back to test this level. Look at it. The last bearish candle that was printed, this was the last bearish candle. Let me just map it out for you to see it. Okay, so price actually came, and this is our sell area. This is actually our sell area. If we have 1:1 from this trade, we are perfectly okay. 1:1 or 1:2. So our target is right here. We hit our target before price started going up again. So we can go through our chart and see a lot of them. I'm going to show you a lot of these things happening on your chart over and over again. You can see another one. Let me show you this. You can see this forming most of the time on your chart. You want to see this. Look at this. Price came to this level, okay, and then came back. This time around is a bullish mitigation block. Look at it. Price pushed to this area. We have price violating this, you see, order block, and then it came right to this particular order block. This time around is the last bullish candle that price printed that we will mark. This is our bullish mitigation block. So if we expand it, you're going to see it. So this time around we have a bullish market. We put our target right here, and then remember your stop loss is right below the failure swing, and then you can start with 1:1, and then if you have chance you can expand it to up to this level. So you can see this happening, guys, over and over. Mitigation block is one of my favorites. You can see them on your chart forming. Now I'm going to show you one of the secret I use for this entry. I use the 2 time frame rules for entry in this kind of situation. I'm seeing something like a mitigation block right here, but I'm not sure this will give us what we want. This movement, it came back to this area, and then we have a failure swing. It came all the way to this side. It came back, but it never touched our bullish candle. Okay, so we may not pay attention to this. We just give up on this. If you don't see it come back to this area, please give up on it. We have such kind of situations happening time and time again, but we don't want to guess this kind of thing. We just let it be. We will have another entry. Let me find another one for you so you can see them happening over and over on your chart. Look at something right here, guys. I'm seeing this and I'm tempted to use it as a mitigation block. We have price coming to this area, come back to this level. We can see it, okay, and then it pushed to this side. We have it coming back to this level. Our last bullish candle that was printed was this guy, okay. This guy was the last bullish candle that our price printed, and then we put our target here. You can see them happening time and time again. Our stop loss, we can use 1:1, and then we can later expand it as we see price giving us exactly what we're looking for price entry. So you can see these things. Let me find another one. You can see them time and time again on your chart. You don't have to struggle. Don't force yourself on it. Make sure you stay patient to see how these things form. We can see a mitigation block here. We have price like this come back, then we have it took out this level, and price came back to this area. We can see it at this point. This is our bullish mitigation block. Okay, so our trade entry will be around this area, this level. Then we will have our stop loss right below the failure swing, and then we can start from 1:1, and then we can expand it as price gives us entry that we are looking for. So you can see this over and over and over and over again happening. This is like a mitigation block, but I'm not seeing exactly what I'm looking for. You can see price came back to this area, and then it pushed up, but it never came back to the last bullish candle that price printed. This last bullish candle was not retested, so we're expecting to see price come back to this level before we can take the buy. So we will just let it be. We don't want to force our opinion on this. I've also made a video on how to use a breaker block. This is mitigation block, so we don't want to force our opinion on it. So let's check another one if we can find. And if we cannot find them, let me go to my MT5, and then we're going to find another one right there. Okay, this is my MT5 and this is gold, and you can see another one right here. I'm going to show you how I take trades with this. Okay, so right here I have something that I'm looking for. We have price came back to this area, and then it pushed up to this level again, came back to this area, and then we broke above it to this level. This is our failure swing, and then we have it come back and test our last bullish candle. Okay, so we don't want to see price push outside. Okay, so this is our entry target. This is where we will enter, but I want to minimize your risks. You can actually minimize your risks if you want by going to the lower time frame, just one time frame lower from the time frame you found your mitigation block. Okay, in this regard we have a bullish mitigation block, so we will go to 15 minutes because this is 1 hour time frame. If we drop down to 15 minutes, we're going to find it right here. Let's go to that place. If we can find it in that area, I think I will be glad to see it. Okay, see it right here. This was the mitigation block that we mapped out in that 1 hour time frame. So if you want to take your trade without any fear, you can patiently wait for something like this. You can see this area where we have a break of structure around this area in the lower time frame. We have a break of structure, we have return to order block, we have an order block inside this, so we can take trade at such kind of area. Okay, this kind of level is where we can take trade, and then we can be so sure of taking trade from that area. Even in this lower time frame, I can see a mitigation block that I'm very interested in taking trade from. You can see this guy push up to this level, then we have another push down. Okay, we have a failure swing from this area, and then it came crashing to this side. Okay, came crashing to this area, and then it came back to test this last bearish candle that was formed. This was the last bearish candle that was formed. So this is where we can take our trade. This is 15 minutes. If we want to minimize our risks, we can go to the 5 minute and then see how we can take trade from that area. Okay, from the 5 minute, you can actually see from the 5 minute, this is the 15-minute mitigation block, and we had a change of character right here. Okay, we have a complete change of character at this area, and then we have return to order block. You can see this is return to order block at this area. This is our trade entry. We can enter our trade from here and come down. This is more sure for us to take trade like that. If you find value right here, guys, make sure you subscribe to this channel, and if you have any question, let me know. This is a mitigation block. I'm tempted to see a lot of these happening over and over again. We have a mitigation block at this area. We have a failure swing. This is MT5. That's why I'm not able to draw perfectly with it. We have price crashing to this area. Our last bearish candle was this area. Okay, this is our last bearish candle, and then we can take our trade from there. So guys, thank you for watching. Make sure you subscribe to this channel to have more value from me. If you want to learn the smart money concept, I will help you learn it perfectly. Thank you for watching. See you next time.